Title: Understanding Exchange-Traded Funds, ETFs. What you need to know. Exchange-traded funds, commonly known as ETFs, are a popular investment option. In this video, we will explore what ETFs are, how they work, and clarify some common misconceptions. Let's dive into the key aspects of ETFs and explain why certain statements about them might be misleading. First, let's address a common question. Are ETFs backed by any assets? Contrary to some beliefs, ETFs are indeed backed by assets held by the fund. When you invest in an ETF, you are essentially buying a share of a fund that holds a diversified portfolio of assets such as stocks, bonds, or other securities. This means that the value of your investment is directly tied to the performance of these underlying assets. Next, let's consider the role of the companies that create ETFs. These companies act as financial intermediaries. They are responsible for creating and managing the ETF, ensuring that it accurately tracks the performance of its underlying assets. These companies facilitate the buying and selling of ETF shares on stock exchanges, making it easier for investors to gain exposure to a broad range of assets without having to purchase each asset individually. Another important aspect to understand is the transaction costs associated with trading ETF shares. Generally, the transaction costs of trading ETF shares are lower than the combined costs of trading the underlying assets. This is because ETFs are designed to be more cost-efficient. When you trade ETF shares, you benefit from lower brokerage fees and the economies of scale achieved by the fund. Now let's examine why some statements about ETFs might be incorrect. One statement suggests that ETFs are not backed by any assets held by the fund. As we discussed earlier, this is not true. ETFs are indeed backed by a portfolio of assets, which provides the basis for their value. Another statement claims that the companies creating ETFs are not financial intermediaries. This is also incorrect. These companies play a crucial role in the financial system by facilitating the creation and management of ETFs, thereby acting as intermediaries between investors and the market. Lastly, there is a statement that suggests the transaction costs of trading ETF shares are not lower than the combined costs of trading the underlying assets. This is incorrect as well. One of the primary advantages of ETFs is their cost efficiency, which allows investors to trade shares at a lower cost compared to buying and selling each asset separately. In summary, ETFs are backed by assets held by the fund. The companies that create ETFs are financial intermediaries, and the transaction costs of trading ETF shares are generally lower than the combined costs of trading the underlying assets. Understanding these key points can help you make more informed investment decisions and take advantage of the benefits that ETFs offer. Thank you for watching this video. If you found this information helpful, please like, share, and subscribe for more insights on investing and financial markets.